HPQ just reported earnings, and it beat on top and bottom line. Earnings per share came in at 85 cents versus the expectation of 84 cents, 14.8 billion versus the 14.73 billion. Now, looking forward, they increased their dividend 5%. A lot of people are going to like that. We'll see if that's affordable when we go through. Fourth quarter sales fell 11%. Desktops fell 3%. Printers fell 4%. However, commercial side gained 5%. Also, forward guidance, they're looking in that 70 to 80 cent range. And by 2025, they're looking to cut 4,000 to 6,000 jobs. So along with all those other tech companies, now you're seeing HPQ start getting into the mix. They already putting a cost-cutting proposal that's over $1 billion going forward through 2025. It's not a surprise. The macro world is kind of changing, and tech, which was the shining ball on the hill, is no more, and that's kind of what we're seeing in the space. So as you can see right now, the stock is currently down 1.21%. It was floating around. It was kind of even, kind of positive, and now it's back to negative. So looking at the 8 pillars, a lot of people in our community really like this stock. Why? Because it is an 8-pillar stock. I have never owned HPQ. Paul does own HPQ or has owned HPQ. I'm not sure which one, but I mean, it's a great company. They're aggressively buying back shares. This is actually one of those companies that I consider to be a cannibal, which is what Monish Pabrai has talked about. It's a company that just continues to buy back its shares at good prices. That's the difference. It's buying it back when the price of the stock doesn't meet the valuation of the company. It's undervalued. And that's when they start aggressively buying back shares. You can see they barely have 1 billion shares outstanding at this point in time. So let's go and look at that dividend that we talked about. So right now, their forward dividend is 3.4%. They are paying out about $1 billion. And looking at their 5-year average, about $4 billion. Current trailing 12 months, $4.5 billion. That is a very, very safe dividend. And for them to be returning money to their investors in that way is perfectly fine, on top of that aggressive share buyback. So they're just looking for stuff to do with their cash. Let's go look at their cash flow over the last 5 years. They're going to look for stuff to do with their free cash flow, and it is incredible. 3.72 billion, 4.37 billion, 2.37 billion, nearly 5 billion, and then about $4.5 billion. The average is about $4 billion over the last 5 years. So they are really in a really great position. Now I'm actually starting to see why Paul is liking this stock. I'm going to see what price I would want to maybe pay for this. The revenue has grown. And the nice thing is about HPQ, it really didn't get that COVID spike. I don't like seeing companies that go from $58 billion to $78 billion within a matter of a year or two. Now it was $58 billion into 2020. It was $56.7 billion and then $62 billion. Pretty big jump, but nothing crazy. $64 billion, $65 billion, nothing out of this world crazy. So that is something that I like. Let's pull up the report that they put out. Now, like I said earlier, fourth quarter revenue, $14.8 billion, down 11.2% from the year prior. Guys, remember, when we're thinking about the desktop world, the printer world, we went from having a time of, let's see, I'll just go here and I'll just draw right up here. We went from having this in the computer world. This was computers for a decade. Nothing. Didn't go anywhere. And then all of a sudden, 2020 came around when everybody was at home and it went like this. And now it's trickling back down like this. And people are saying, oh my God, the computer space is dead. Well, no, there was no growth in that PC world for an entire decade, literally an entire decade. And then that industry got really lucky by having this big spike. Well, now computers are just coming back down. So it's not surprising to see these companies that are heavily in the desktop space, especially coming back to normal, in the printer space. I mean, this is normalcy for these types of companies. Let's see what let's go back to that report. Fourth quarter returned $1 billion to shareholders in the form of repurchases and dividends. They announced the early increase, announces a future-ready transformation plan, estimates annualized gross run rate cost savings of at least $1.4 billion. Now, this is what I was talking about. They're going to look at a $1.4 billion cost-cutting structure into 2025, which is going to cost 4,000 to 6,000 people their jobs. But again, it doesn't worry me. It goes along with the rest of the industry. Anything else in here that we need to see? Fourth quarter outlook. Let's see the outlook. Fiscal 2023 is looking for diluted net earnings per share to be in the range of 47 to 57 cents. And our number that we're going to be looking at, earnings per share, 70 to 80 cents, which is what they previously said. Let's see. Do they have revenue estimates in here? Anticipates free cash flow, 3 to 3.5 million. Okay. All right. So, let's see what the analysts have to say. Earnings per share growth, it's kind of all over the map for the next 4 years. Revenue growth, it doesn't even give it out through 2024 from analysts. Remember, this is a smaller company. I mean, it's a $30 billion company, and honestly, it's a pretty boring company. So you're not going to have a lot of analysts running the gamut on this thing. Now, let's put this in Stock Analyzer, and this is actually going to be a good one for me because this is somewhere where I can look at and say, hey, we're getting to maybe I'm going to guess that it's in value territory right now. What do I want to pay for that? Because along with my market thesis, I think stocks are going to go lower. So do I want to start acquiring shares now in dollar cost averaging, or maybe wait, take my chances and see if I can get it at a cheaper price all around? So let's put in some numbers here. Let's do -2, 1, and 4% revenue growth. I think 4 may be high, but -2 could be low. Let's go with 4. Let's go 5 and 6. Let's go on that high end 6. Same thing for price to free cash flow. And what I'm putting in here, guys, is my expectations or assumptions for the next decade. So you can see that I'm doing a 10-year analysis. So PE, 8, 10, and 12. 8, 10, and 12 for price to free cash flow. And my return. Paul always asks the questions. Is this company going to be around in 5 years? And would I be surprised if it was gone? To me, I would be very surprised if HP was gone. Maybe the growth isn't there. Maybe it's a shrinking, quote unquote, dying company, but I would be surprised if it was there. Do I think they're going to make more profit and revenue 5 to 10 years from now? I don't know. Again, this can be one of those stagnant companies, but even for stagnant companies or declining companies, there's a price to pay for them. Okay. So let's go through and do my margin of safety here. 15%, 17.5% on the high side. $29.30. This is going to spit out 6 numbers, okay? This doesn't mean go buy. If they're all green, it doesn't mean go buy. Okay, interesting. So I was expecting more green here, but $18 a share is what I want to pay on the low end, $33.75 on the high end, and my middle ground is about $25. So what this is saying on the high end, this is green. If you believe that this company is going to do 4% revenue growth over a decade, profit margin of 6%, free cash flow margin 6%, and you can get yourself a 17.5% return, then this is probably a buy for you. For me, like I said, when I was putting in number 4, I said, that might be a little bit high. I'm probably going to err to the side of over here, and I'm going to probably look at this somewhere around $22. And the reason I have this on my watch list at 25 is why. I want to go and look to sell some puts on this. When this hits 25, I want to be notified, jump in there, maybe sell some options at $22, $21, $20, anywhere below, and that is how I am going to acquire a position. So if you like videos like this, instant reaction videos, you could see they just posted. We came on here and we told you all about the company and we put a stock price on it. Subscribe to this channel. We do them all the time. See you later.